What's going on, everyone? My name is D. Anthony with EvolutionTraders.com. We are taking a look at the S&P 500. So ticker symbol for the ETF is SPY. It is currently 11:45 Pacific Standard Time on the 20th of October. So today we did have a little bit of an initial push higher. However, we were rejected at the top of the range. One thing that I do kind of want to keep everyone, at the top of your heads is that until the S&P 500 gets over $372.39, this is still considered a downtrending sort of trend, right? So if we look at what's going on here, this linear regression channel 50 line here, this light blue line, you can see back here in the beginning of October, we kind of tested this range, 1 to 3 days, tested this range, tried to test the 20 SMA, was rejected. If you look at the bottom of this range, we bounced one time here, we bounced one time here. Now, as we were up at the top of this range, yet again today, testing the upper range here, $372.77. If we get over that price point, that is when I would say take your best favorite stock that you like to trade in the S&P 500 or the ETF itself, the SPY, and take this long for a nice ride here. If we get over this price of 372, I would try to play this into 377 for a potential swing. Now, being that we were rejected, we are coming down back below the 20 SMA, falling below the 5 SMA, and we have this little bit of remaining demand zone here at the 10-day moving average, sitting at around 363. With this, the way that it stands right now, if we close below the 5-day moving average, tomorrow all I'm going to look for is an entry for a short position through today's low and look to try to cover at around that 363, and obviously going to hold the runner, because if we do start to break and crack below this 10-day moving average, we've got a lot of room down to potentially test the CPI low here at around 348, between 348 and 350s, low 350s. Anything below the 10-day moving average, we could be coming all the way back down to 353, which is this rising Bollinger Band here. You can see these Bollinger Bands are starting to contract. Anytime the ranges start to contract, you're going to get more choppier action, and you're going to have to wait and be a little bit more patient, especially if you're a day trader. If you're a day trader, you can't just be jumping in long, jumping in short, jumping in long, jumping in short. Experienced day traders have a tough time as it is already. The range that we're currently in, that 372, 373, and that 363, so again, a 10-point range. Anytime we tend to go in those ranges on the ETFs, it's generally a 10-point range, 10 to 12, 10 to 15-point range. What I'm really focusing on here is going to be this macro break below the 10-day moving average. Now, I will take the scalp below today's low, but what I'm looking for, the big trend change, the big expansion move, I'm going to be looking for a break below the 10-day moving average. So kind of put that on your charts now, and then obviously to the top side, my swing to the top side is over that 372 and getting back over this 50, this linear regression channel 50. If you don't have this supply and demand zone on your charts, I would put it up. It's a good little indicator. You can see how we kind of follow it. Very, very good. We break down, we come to the bottom of the range, we bounce, we go to the top of the range, we come down, we break for a brief moment, come back up to the top. So it's called a linear regression channel 50. Okay, linear regression channel 50. I use Thinkorswim for my charting platform. If you guys are using Thinkorswim, you guys should be able to pull it up. Just go to enter a new study, look for the linear regression channel study, make sure it's that linear regression channel 50. I hope that helps. My name is D. Anthony with EvolutionTraders.com. If you guys would like to join the Discord, that link is down in the description box below, and I will catch you guys all in the next video.